Debits and credits, the building blocks of accounting and bookkeeping. So widely used, yet so poorly understood. That's because it's not easy to explain how debits and credits work without using lots of confusing accounting jargon. So in this video, we're going to focus on learning about the concept that when a transaction happens in your business, the debits and credits that are entered into your business accounts must always be of equal value. In other words, for every $1 of debits, there must be $1 of credits in your business accounts. To demonstrate this concept, we'll explore the debits and credits for a simple sale transaction and a simple expense transaction for a small business. To keep things simple, and to use the least amount of accounting jargon possible, we won't go into the reasons why the debits and credits are allocated to certain places in the business's set of accounts. We'll learn about the reasons why in the next video in this series. Instead, we'll focus on the fact that every business transaction has debits and credits, and they always have an equal total value. So let's dive in and go through the debits and credits for a few simple business transactions. Now, before we take a look at the debits and credits of a few transactions for a real business, we need to cover a bit of theory. No matter what type of business you run, you should keep a record of all your transactions in what's called a set of accounts. This can be done in a number of ways, including by using bookkeeping software such as Xero or QuickBooks, a spreadsheet in Microsoft Excel or Google Sheets, or even an old-fashioned paper ledger book. It really doesn't matter how you do it, as long as all your business transactions are recorded and your accounts always balance. As the name suggests, a set of accounts is made up of a collection of individual accounts. These individual accounts are called general ledger accounts, and they are organized into 5 account types: assets, liabilities, owner's equity, revenues, and expenses. Each individual general ledger account that is found in a set of accounts belongs to one and only one of the 5 account types. For example, a general ledger account called rent, where you record the monthly rent payments you make to lease your office, belongs in the expenses account type. An account called cash at bank, which records all the money that goes in and out of your business bank account, belongs in the assets account type. And an account called sales income, where you record the money you make when you sell goods or services, belongs in the revenues account type. Those are just a few examples of the general ledger accounts you can find in a set of accounts and how they each belong to one of the 5 account types. And depending on the type of business you run, you could have anywhere from just a few to several hundred general ledger accounts in your full set of accounts. Okay, so now that you know how a set of accounts is structured, let's take a look at how debits and credits come into play. Every transaction that happens in your business has 2 sides, a debit side and a credit side. And no matter what type of transaction it is, the total value of the debit side will always equal the total value of the credit side for that particular transaction. So, if the transaction is for $100, the debit side of the transaction will be for $100, and the credit side of the transaction will also be for $100. This means once the transaction has occurred, you must enter $100 of debits and $100 of credits somewhere in your set of accounts. Exactly which individual general ledger accounts the debits and credits go into depends on the type of transaction. But just remember, as a general rule, the total value of debits will equal the total value of credits recorded in your set of accounts for any particular transaction. Now that we've covered some basic theory of debits and credits, let's take a look at a few examples to see them in action. Let's say you're a freelance graphic designer and you run your business from home. You make an income by designing logos, flyers, and other marketing material for your clients. From that income, you pay for a few expenses such as a monthly Canva subscription. Now, of course, there are other types of transactions that can happen in your business, but let's focus on your income and Canva expenses to keep things simple. Alright, let's say you've created a logo for a client and they've paid you $500 for your services. This is a basic sale transaction, so it's a good place to start. To keep things simple, let's assume your client paid you immediately by transferring $500 into your business bank account. So the transaction between you and your client is complete. You have delivered a logo, and they have paid you for it. As we've learned, the total value of debits must equal the total value of credits for any transaction that happens in your business. So, for this sale transaction, you need to enter $500 of debits and $500 of credits somewhere in your accounts. As you may have guessed, the perfect place to record one side of the transaction is the general ledger account called sales income that we mentioned earlier in the video. The sales income account is normally used to record any income you make when you sell goods or services. So the first entry into your set of accounts will be a credit of $500 into the sales income general ledger account, which, as you may recall, belongs in the revenues category. That's half the job done. Now we need to record the other side of the transaction, which is a debit of $500. Because your client transferred their payment straight into your business bank account, you should see a deposit of $500 on your bank statement. This gives you a clue as to where you should record the debit side of the sale transaction. You might recall from earlier in the video that we mentioned an asset account called Cash at Bank. This is the general ledger account you use to make a record of the money that goes in and out of your business bank account. In other words, the Cash at Bank general ledger account should contain the exact same transactions you see on your bank statement. Because your bank statement will show $500 of money coming in from your client, you need to replicate this in your Cash at Bank general ledger account. This means that the second entry into your set of accounts for the sale transaction will be a debit of $500 to the Cash at Bank general ledger account. So now you have a $500 credit going to the sales income general ledger account and a $500 debit going to the Cash at Bank general ledger account. You have successfully entered the same value of debits and credits into your set of accounts for the sale transaction, so the job is done. Okay, now it's time to turn things around and take a look at the debits and credits for the opposite type of transaction, an expense payment. Each month you pay a $20 fee to Canva for a Pro plan subscription. You use Canva to create logos, banners, and other marketing material for your clients. To make the payments, you have set things up so that $20 is automatically deducted from your business bank account each month and paid to Canva. So let's take a look at how to allocate the debits and credits for one of those payments. As you already know, anything that appears on your bank statements should also appear in your Cash at Bank general ledger account. This means that the first side of the expense transaction is going to be a credit of $20 in the Cash at Bank general ledger account. That's one side of the Canva transaction done. Now we need to record the other side of the transaction, which is going to be a debit of $20. Because the payment to Canva is an expense, you need to record the debit side in a general ledger account that belongs to the expenses account type. A perfect place to do this would be in an account called subscriptions or something similar. You can give the account any name you like, as long as it's categorized as an expense in your overall set of accounts. So, the other side of the Canva transaction is a debit of $20 to the subscriptions general ledger account, which belongs to the expense account category. The result is that you've recorded $20 of debits and $20 of credits in your set of accounts for the payment you made to Canva. Another job well done. Okay, so in this video, we've seen that for both the sale and expense transactions, an equal value of debits and credits were entered into our set of accounts. This principle applies to every transaction that happens in your business. The total value of debits for a transaction will always equal the total value of credits. It's one of the fundamental building blocks of accounting and bookkeeping, and it's the main thing I want you to take away from this video. In the next few videos, we're going to build on this knowledge and dive deeper into debits and credits, the 5 account types, T accounts, and more, so that you can gain a better understanding of the accounts for your business. Up next, you'll learn more about the 5 account types and how to decide whether an entry you need to post into your set of accounts should be a debit or a credit. See you there.